JB here. Hope everyone's doing outstanding. August 6th, 2024. We have about 39 minutes to open. Talk really quick about the market, some names I'm looking at, and go from there. But pretty crazy session to start the week. The Nikkei kind of led the charge Sunday night into Monday, selling off over 12%. It's biggest drop since Black Monday or what was Black Tuesday for the Nikkei in 1987. And then U.S. futures is jitters around the economy, right? The follow through on the jobs report from Friday. Then you have geopolitical concerns in the Middle East, and you have all these buzzwords that just start popping up, right? No one's talking about this yen carry trade until the Nikkei sells off with 12%, and then it becomes this big rationalization of the market move. Um, Hopefully, we can find some footing here. I mean, I always try to keep things in perspective, and you start looking, we're not below May levels, so only a couple months ago, this is where we're at, and if you typically when we do have these pullbacks, it gives back months of gains in only a couple sessions. That's typical. Uh, I mean, it's not fun, right? But hopefully we find some footing here. Now you have the folks calling for a possible emergency rate cut. It's funny how all that sentiment changed. Only a couple of weeks ago, there was still the expectation of two rate cuts, and some people are actually thinking there was going to be no rate cuts. And now all of a sudden, you start looking all the way out till December, and there are people pricing in. I think it's like 30% are pricing in five rate cuts, 5/4% rate cuts before the year is out. So I think settle down a little bit. Hopefully this week we find some footing, and I think that chat will go away. Don't forget 2 weeks, 2.5 weeks, we get Jackson Hole. So Powell will speak at Jackson Hole. Is he going to paint the picture for at least a half rate cut? Is there going to be emergency rate cut? I hope not. I think when you do that kind of emergency rate cut, it happened back in COVID. It's because things have gotten really bad, right? So I mean, if the market continues to sell off, we drop another 3 or 4% this week, and then a lot of volatility. Maybe there can make the case, but for now, I think that's I guess a little. Uh, I would say that's overreacting, right? And typically, when you have the market's going, tumbling, people tend to overreact. They tend to sell at the lows, right? That's just how it works. So anyway, taking a look at the SPY, and I was looking, so we're down to 510 or so yesterday. I think it was 509 and change before the open on the SPY. So that would be a big spot. Don't want to see that get broken again this week. On the flip side, 523 or so looks like resistance. So that was the highs yesterday. If we can get above that, I think that bodes well. Also just nasty. If you take a look at the small caps, IWM had that huge move, the divergence where the small caps are rallying, and now on that CPI, cooler than expected CPI data, and now it's reverse after that jobs reports. It's like people are baking in recession. Pretty remarkable stuff. But take a look at the IWM, 196 or so is 200-day moving average. Want to see that holds. And then last but not least, you look at the TLT, just a monster move. TLT is the yields, but 91 to 100 it's 1, 2, 3, 4, 5, 6, 7 straight days of gains. So that means yields have dropped over the last 7 days. So just a pretty remarkable move. Hopefully we find some footing and we can, say, hey, that was the great move of 2024, and that'll be it. But if not, should be interesting. Take a look at the VIX as well, too. I mean, the VIX hasn't hit these levels since back in COVID as well. And when the VIX is at these, when it's at 60, it's a heck of a lot more difficult to play weekly options because the premiums are elevated. And even if you get a stock to bounce, the VIX goes down. And because the VIX is going down, the premiums go down. So you need the stock to move almost twice as much to make money. So hopefully the VIX can come in a little bit. We get some bounces, and things can be constructive. So that's the overall market. So yesterday, I was talking about playing hedges in regards to the market. Unfortunately, I didn't have TZA calls. I had the 15 strikes that's expired in July. I think I had the July 16th, July 19th, right? But I did have the nugget puts, and that's more of a trade against gold. And the miners sold off yesterday in tandem with the market, able to close some of my nugget puts out. My August strikes out for about 400%. Still held the rest into today. I'll probably hold those pending any crazy squeeze to the upside, almost as a as another form of hedge, but I do think it comes down into the mid 30s in the coming weeks. I may look for some other opportunities to play that one, or I keep saying dust, J dust, or even GLL calls, because I think at some point gold's going to come back down to at least $2,300. If that happens, all those names will pay out well. So that's that. When it seemed like the market was just gonna free fall, I went and started to try to nibble some bounce calls. And the first one I looked at was DELL. You take a look, it's 180 plus stock at the end of May, and it's pretty much been cut in half. Tested $90 yesterday. It's just remarkable. And it's not like this is a small cap company, right? I mean, it eclipsed $100 billion uh, back in May, and so it pretty much gave back. You're saying the market has discounted, has just underappreciated, said it overappreciated the stock by $50 billion over the course of 2.5 months. Just doesn't make sense to me. But uh, added some weekly strikes. I'm not sure if I'll add anything into earnings just yet. Was able to close some of my calls out for 100% to cover costs. And I think it trades over $100. And you look 200-day moving average 104.07 or so. I think if it gets over that, it's off to the races. I also went and got some more TWLO calls. I played those for some speculative calls on Friday after its earnings. Locked some nice gains on that one. And then I played it again yesterday morning, just because, again, you look at the moving averages, 57 and change. It came down, I think it was 50, 57, 55, and then bounced. I think it trades into the mid 60s, or at least gets back to its 63, 64 handle. If that happens today or tomorrow, the my speculative calls will look very good. So not going to any more, but I think that's a great way to play some. They were inexpensive at the time, which I was kind of surprised at. Um, Turns. So Turns Pharmaceuticals reported earnings after the close yesterday. It's not really earnings per se, because they don't have sales, but they do talk about their cash runway. They still plenty of, 200, I think it's 206 million dollars in cash, $225 million in cash and equivalents, cash runway into 2026. They also announced that their GLP-1 oral drug data will be out in September. So they gave more clarity and timeline in regards to that data. And then he also said that so far in the study, there's been no adverse effects and no one has dropped out of the study. And if you take a look at some of these other GLP-1 studies that have happened, even the Roche was crazy. Well, they didn't even give specifics, but there's been, I think maybe it was GPCR, huge amount of folks have dropped out of studies on his GLP-1 drugs based on gastrointestinal issues or nausea, vomiting, things like that. And so to hear that, I think that just bodes well. And I think it trades much higher. The unfortunate thing is I have the August strikes. I should have went out and got the Octobers, because those premiums are going to go up based on the fact that they'll have their data out in September. So I may look to get some Octobers, just depending on what the premiums look on that one. And then Fiverr. So Fiverr was actually up 3% yesterday. It was in the green on Friday. Um, and the 3% move is despite the huge sell-off in the small caps and the overall market. So I think that bodes well. I think it trades over 25 today, and I'll continue to look for opportunities to lock out some of my September strikes. I think it heads over $30. Some earnings after the close today. So DELL, I'm not saying there'll be a huge sympathy move, but if Super Micro reports after the close, if they have a great quarter, and they're going to need a great beat and raise, but if they can do that, I think that'll bode well for the other names, especially names that have sold off, and DELL's one of those. So I think that'll bode well. You have Airbnb, Rivian, Reddit, Win, uh, and I'm trying to think. Oh, this morning, Caterpillar, nice beat and raise. It just unfortunately looks like it's just coming a little bit to the market, but that one's looking pretty good this morning. Uber up near $63, over a 10% or nearly a 10% move on its earnings. So I guess you could, you take it with a little silver lining, but I think that the earnings, they continue to come in better than expected. You kind of dismiss some of the conversation around this R word, right? The recession. I think that's it, folks. I'm trying to think of some of the other things going on. Just lots of earnings this week, so those will continue to come tomorrow morning. So I have to close Super Micro, and all those other Rivian, all those names. Then tomorrow morning you have Shopify, Disney, CVS. Let's see why I get this going. That's all right. Well, that's not working. But yeah, earnings are probably going to steal the spotlight, and then you're going to continue to have this chatter that Fed's going to have to do some kind of emergency cut. So hopefully the market finds footing. We can dismiss that chatter and go from there. That's it, folks. I'll be back on audio later. Let's have a great day. Rock and roll.